This stock just lost nearly 30% in a single day. No earnings miss, no bad guidance, but something far worse. A federal indictment, a $2.5 billion smuggling scandal, and a potential break with one of the most important companies in AI. Today on Ticker Detective, we're investigating Supermicrocomputer, ticker SMCI. Quick disclaimer, this isn't financial advice, just my take. Always do your own research. Now, before we get into what just happened, it's important to understand what this company actually is. Supermicrocomputer isn't just another tech stock. They build the servers that power AI, working closely with companies like Nvidia. And over the past year, the stock exploded as AI demand surged. At one point, this was one of the hottest AI stocks in the market. But all of a sudden, everything has changed. On March 20th, SMCI stock just collapsed nearly 30%, wiping billions off its market value in a mere few hours, and hitting a new 52-week low. This wasn't gradual. This was a full-scale panic sell-off. So what caused it? The U.S. Department of Justice unsealed an indictment, charging 3 individuals, including SMCI co-founder Wally Liaw. The allegation: a $2.5 billion scheme to smuggle restricted AI hardware into China. According to prosecutors, the operation routed servers through shell companies across Taiwan and Southeast Asia. The goal: to bypass U.S. export restrictions. In some cases even, investigators claim the serial numbers were altered to disguise the true destination of the hardware. And here's where things get serious, because SMCI doesn't operate in isolation. It relies heavily on Nvidia. Nvidia supplies the GPUs that power SMCI's AI servers, and analysts estimate SMCI represents a meaningful portion of Nvidia's ecosystem. If Nvidia is forced to distance itself in order to comply with regulations, that could be absolutely devastating for SMCI. The market reacted immediately. Investors didn't wait around. They sold first and asked questions later. At the same time, competitors began to benefit. Companies like Dell, which are also heavily involved in AI infrastructure, saw positive movement as investors looked for safer alternatives. But this wasn't just about one stock. The shock spread across the AI sector, with related stocks and AI-focused funds seeing weakness as investors began to question just how exposed the entire space might be. Because when a key player in the supply chain is hit, it doesn't just stay contained. The bear case here is pretty serious. Reputational damage, regulatory risk, and the possibility that major customers simply walk away. There are also concerns around compliance, auditing, and even the potential risk of delisting. Another important point to note is that this isn't a case of bad luck. SMCI is no stranger to controversy. The co-founder had already resigned once in 2018, following an accounting scandal, only to be rehired in 2022. This is where the seasoned investors see a huge red flag: a culture of non-compliance, repeatedly under investigations of the DOJ or the SEC. Well, is it worth the risk? And that is likely the thoughts on the Nvidia board right now, threatening the very lifeblood of SMCI's business. But where there are bears, there are bulls, and therefore a contrarian argument. SMCI is still a major player in AI infrastructure, particularly in liquid-cooled systems. If this turns out to be isolated and the company itself isn't deeply implicated, there is a scenario where it recovers. So is this a buying opportunity, or something to avoid? This isn't a normal dip, it's a regulatory crisis, and catching a falling knife. In a federal investigation, is one of the riskiest moves an investor can make. For now, the market is clearly choosing caution. Quick disclaimer, this isn't financial advice, just my take. Always do your own research. For more stock breakdowns, subscribe to Ticker Detective. And as always, invest smart, stay sharp. Thanks for watching.